we're part of that conversation to say, we're very heavy regulated, so what regulations do we have to do? What's our risks there? What do we need to do to make sure that we understand those and kind of quantify them? So we're part of those conversations, and then once a year we do kind of have a more formal kind of strategic planning sessions, and we try to look at those of saying, what's new, what's changing, and have those conversations even if it's not once a year, if there's something that triggers those changes or an event happens that makes us kind of have those aha moments. So making it more dynamic than just a piece of paper that we, file away on in our computers.
Yeah, so Tri-City, one of our core values is redefine the industry. So we always try and be on the cutting edge of, that's geared towards the construction build side of things. But that same kind of principle goes in line with risk management as well too. So, as Steve said, not just a check the box mentality, but how do we be more creative and come up with new solutions to manage it? So, just like the framework for every industry, we recognize the risk, we analyze it, we prioritize it, and then we mitigate it. We start on the construction phase, we start with the beginning, so that goes into pre-planning before any project kicks off. So that's our chance to recognize the risk and to try and, form that framework to mitigate it. We also do post-job debriefs, we do post-incident debriefs, so when something negative does occur, we really want to dissect that, get down to the root cause analysis, and use that as a tool going forward, as we've always kind of learned lessons learned. We also like to empower our people, get everyone involved, not just the leadership team and the management team, but having everybody recognize the risk, in different capacities throughout the company. So that could go to, from the ownership of the company down to the first year apprentice. And, being that set of eyes and whatever level it is they are within the company, identifying that risk and coming up with ways to mitigate it. Other ways strategically, from an insurance perspective, there's options out there. We're part of a group captive insurance, similar to large deductible structures, a way to control your cost and take the successful risk mitigation that you've had over the years and then use that to a cost savings advantage, and again, further control your risk within the organization. So again, we try and take a different approach than just the check the box mentality.
Well, at Allied, we're certainly not a check the box. We don't even have a lot of paperwork. We're a contractor, so we kind of revolt against paperwork when we can. I had handled Allied's insurance for a number of years before I was hired there. They'd had a series of safety directors there, and when they asked me to come to work for them, I said, I'd love to come to work as a risk manager, but I will never be a safety director. So when I came in the door, we're a very heavy work comp insurance based. We have 700 employees on any given day that are carrying sheets of drywall that weigh 106 pounds apiece. So obviously there's a lot of risk to that when you're doing that 8 or 10 hours a day. We manage our other risk and we do fine, but work comp is our biggest exposure. When I got there, our standard premium was in excess of $3 million. We went on a cost plus basis. I went to my boss and said, I need $70,000 of seed money. And he gave it to me. And I implemented a program where we sat down with our superintendents and their wives. I've told this story before. I tell this story a lot because this has helped to change the culture of Allied. We set them up with this incentive program. We set guidelines. We showed them where our benchmarks were. We gave them goals to cut our work comp accidents in half. And if they did that, we were going to give them a $5,000 travel voucher, tax-free, to take their wife on a vacation any place they wanted. I involved their wives because I wanted the wives to be involved. To this day, I still get superintendents cussing me out because every day they get home, the first thing their wife doesn't say how their day was. They said, did anybody get hurt today? Because they look forward to these trips. And in that time, when we first went on the Cost Plus, EMC's our insurance company, they had a loss pick of $1 million for us that first year. We've never hit $1 million in the last 14 years. Our average work comp claims right now, average year over year, is about $300,000. So we've taken it down by 90% by decentralizing. And in a lot of businesses we're in, that's not the way it's done, but we've taken a little bit different approach and it's worked to this point in time.
That's a great example. Really hits home, what people driving that risk culture. And that was kind of the next question is like, how do you drive that into the organization? I mean, that's a great real world example that we can all, it's very tangible. But it's difficult to do in a company to really change the risk culture. I mean, I don't know if you guys have any other examples of how you guys have looked at your risk culture and how that's evolved over time.
We have, I think we're at 3,000 employees worldwide, so chemical manufacturing. So we definitely try to drive it down, and lots of safety programs that we've done over the years. But I think one of the main one was trying to finally get near misses to be reported. Because, nobody would want to say, well, I messed up and I ran the forklift into a super sack or something. So trying to encourage that and know that there's no retribution or anything for near misses, that's given us a lot of intel of things that we could be doing different to make it safety for our employees, right? So there's lots of risks, but our employees and customers are our number one priority. So what can we do to make them safe? And I think changing that culture for those near misses to share was a big lift in our organization, but it's been beneficial. And just empowering them that if they see something that could be different and better, that we are listening and willing to make those changes if at all possible, making them part of the solution, because they're the ones on the production floor, at least from a workers' comp perspective, that knows how things could be done better.
One thing we've done is focus on transparency. I know some organizations can tend to or want to hide the negatives, and when we do incur cost or risk, we want to make sure that's well known. Pass through the different levels of the organization to recognize that and see the impact within the company and what we can do differently to try and prevent it going forward. So transparency, whether that's the financial costs, the other negative impacts, whether it's a compliance issue or anything like that, we just want to make sure that everyone is aware of that, and usually that gets everyone's attention more than just talking about it, is when they see those real life examples of, hey, here's what's occurred and this is really the impact that it had. So same thing, lessons learned from a safety perspective. Again, in the construction world, very safety oriented and a very high risk area of our operations. So when something does happen, again, digging up those root causes and determining what happened and being transparent with everyone, not just hiding it and being a closed book so that no one understands it. So there's that balance of of not starting the gossip train, but at the same time using it as a tool to try and prevent those things from happening again.
I would share what Jen said. The near misses was one of our biggest things trying to get on top of. Obviously, we've got a very strong incentive program built in with our bonus structure. The owner of the company was generous enough that all of the insurance savings that comes back, 100% of it goes to the employees in the company. So we have really pushed that down to every employee in the company. And you're talking about millions of dollars. It's significant. But the near misses was an issue. The late reports, those tend to blow up into things. And so it took us years, but we came up with a means, and again, we pushed it down to the lower branch level and the supervisors. So we put penalties in place. And if somebody calls up and says, hey, this guy told me Friday night he tweaked himself, but he didn't think he was hurt, but Monday morning he was hurt and needed to go to the doctor, no problem. But if he didn't tell us that Friday night and it becomes a big issue, then we have the right to choose to make that branch pay for that claim out of their own profits rather than taking it out of the insurance pool. So there are some pretty steep penalties that go into it that can really hurt people's bonus programs, and that's what we've done, and it's been very effective. I used to worry about that a lot. I do not worry about that now. Sometimes I wish I could turn it off because we get a lot of phone calls on things that really aren't near misses.
Well, that's good. Well, for the next question is really around prioritization of risk. I joke that you could basically turn anything into a risk if you wanted to. Like, I'm a clumsy person, so I might trip falling off this, and maybe the stairs should actually go all the way across here so that I don't have that risk. I mean, we all have limited resources, right, of what we can do. to put in place to make it strategic. So I'd be curious, just how do you then, you've got a huge funnel, how do you filter that down to the things that you focus on? So maybe Steve, I'll start with you on that one.
I'm not sure where to go with that one.
Yeah. We try and use the basic risk matrix to prioritize it. You could look at it from a perspective of high probability, high severity, low probability, low severity. We want, in construction, we've got some element of risk in anything that we do. Like Steve said, I mean, just walking up on stage, you can trip going down the stage. You'd never get anything built if you didn't assume some risk. But what we want to do is we want that risk to be prioritized into that low severity, low probability. So if something does happen, we want it to be, less likelihood of happening, and the severity amount to something. In the construction world, that could translate to, okay, maybe, a cut finger or some stitches versus, a hospital stay. So if that risk is in that quadrant where, we don't see it likely to happen and we see a low impact of it, that's the risk we're willing to assume in the operations. When we get into, that other category on the opposite end of the spectrum, that's the stuff that we'll try and mitigate out and come up with a plan before we proceed with it. So real life example in the electrical world, energized work is a big thing that presents a high risk and a probability of injury. So we will shy away from doing that and come up with other ways to complete the project. So just prioritizing it from a severity level. The other thing is going into the projects. Over the years, we've developed some checks and balances for pre-bid work. So we really take a hard look at the projects that we're bidding and kind of have a process that we flow through that starts with the estimating team, through the risk team, and everyone else involved to say, hey, is this a project that we want to proceed with that we're worth doing? If this project has too much risk involved with it, then, the risk versus reward model is just not there. So, that can be challenging on the flip side when you get into slow economies and things like that, where you're trying to get a bunch of work. It's obviously a little bit easier when there's a lot going on. But even in those, those slower times, we still be conscious of just prioritizing it and making sure that we're not, going into projects with unnecessary risk, that it's just not worth it at the end of the day.
I would say we do something similar, kind of the matrix approach, maybe not as formal as we should, but looking at kind of prioritizing risk to customers or risk to employees. I think I've kind of covered some employee stuff, but we are regulated by lots of different organizations, and we're doing additives into animal feed, dietary supplements into human consumption. So that's obviously a big risk, as we are an ingredient into a lot of other things. So really making sure that we're prioritizing not only our employees, but also, do we have good quality controls, QC, RMRA risk assessments, that we're really looking to make sure that we're not putting ourselves at risk as a company, but putting employees and animals into harm's way too. So kind of a lot to look through, and you can rely on your regulations and regulatories to do it, but there's always a little bit more that we try to do to make sure that we're stand behind our science and know we're okay.
So you mentioned regulation in your answer. I know insurance industry, as well as pretty much every industry, is coming under more regulation from different, regulatory bodies. What sorts of risks are coming at you from a regulatory standpoint? And then, does that actually ever create opportunities for your companies?
I can go. So we're a multinational company. We have production facilities in most continents, but yet, so we produce local for the most part, but we still have some synergies that, we have to move production around. And the regulations are kind of a big deal, because Europe is a lot more regulated in some aspects than the US is, depending on what it is. We're in the pet food business, which is more regulated than the human consumption business, which is always surprising to people. But so we kind of have to balance regulations and risks, because the goal is to do the most stringent regulations around the world. But sometimes that doesn't make sense. If I know the India production facility is never going to supply Europe, we want to make sure our product's safe, but maybe we don't have to go to the nth degree of some of their regulations. So we have opportunities that we can balance that. Some other opportunities I think we have, because we do a little bit more than what is required in a lot of our jurisdictions and countries. That's an opportunity for us to go to our customers and saying, hey, we're going above and beyond. We know that this maybe X chemical or parts per million or whatever it is, we recognize that and we're making sure that you're safe. We think it's coming anyway, so let's get ahead of it. It's a differentiation that they can then take to their customers because we're an ingredient supplier to them. So I think we do that. A new one for us that's coming up more and more is sustainability, where in the past we would have looked at that as like a risk kind of reward, but more as to differentiate us to our customers. Some of our large customers were demanding it of us to do something. There's quite a bit of European regulations that's requiring us that we will have to legally report, and even from a financial audit get audited on. So we're trying to kind of take that opportunity to follow that as usually the stricter and early adopters of some of those regulations and do that around the world to kind of, it's the right thing to do and to, as opportunities for our customers.
Yeah, we're fortunately we've got a little bit easier. We're a domestic-only company, so we just have the U.S. regulations to comply with. But in the construction business, obviously OSHA is a big one. We work with MSHA, EPA oversight, a few others that we get into on the regulatory side. But there is a continual push from OSHA, I think, to raise the bar among contractors than what it used to be. So we see, a lot of the regulatory pressures there. As just mentioned, the ESG is a big thing. It's maybe not so much a regulatory issue for us now, but more of a customer demand, customer initiatives that as contractors, if we don't start making headway in, then we're at risk for jeopardizing work going forward. So the ESG pressures, sustainability, green initiatives, anything that we can do on that side, we're trying to get ahead of and put things in place. On the OSHA regulatory side, where it benefits us is, or can got to give us a step up in the industry, is we have always been taking the approach of, we don't want to go out there and just be compliant. We want to take it, one step further. So whatever the regulations might be, that's kind of our baseline. And again, there's, you can walk through and a project can be OSHA compliant, but that doesn't necessarily mean that no one's going to get hurt. There's a lot of other ways to get hurt when still in compliance. So we focus on those things and try and take it, a step further. So when it comes time to bid projects, especially when you get into some of these larger scale projects, a lot of times they're not just looking for the low bidder or the lowest dollar, which again, going back, past few decades, that was always the big thing, who can do it the cheapest. Now they're looking at the overall picture and, what contractors are going to go out there and align their practices with the owners and the general contractors and everyone else involved, because there's a lot of shared risk, from a regulatory standpoint. If one contractor's not doing, things in compliance, that other people or other companies are in jeopardy too around us. So that gives us a step up by kind of being ahead of it and using that, to our advantage when we're bidding work and going into projects.
We embrace the regulatory people. I mean, as a contractor, we deal with OSHA all the time. We would welcome OSHA being even stricter across the board and be more consistent, because we think we do a good job, but we still see bad actors out there that makes it bad for all of us. Our single biggest problem with regulation right now that's developed in the last probably 10 years is the inconsistency and the instability of it. Because whether it's the National Labor Relations Board, EPA, OSHA, whatever it is, it's all handled by whichever administration is in Washington at this point. So when you have a Democratic president, the pendulum swings one way, and when it swings back the other way when you get a Republican. And when you only have somebody in office for 4 years, things swing pretty radically all the time. And it's very difficult to plan for it. It frustrates our ground level employees. They just don't know what's expected. And that's our biggest challenge right now. And we haven't come up with a solution for that, so if anybody has one, I'm all ears.
I'm not hearing any, so thank you. All right. So I've got one more question, and then we're going to open it up to audience. So start thinking of some questions. I think that'll really make for a more meaningful day, and we've got a microphone here we can pass out as well to get those questions. But so maybe Steve, I'll start with you on this one. You know, we all, as our role at times, we have to say no. We don't want to be pigeonholed as that person that only comes in to say no. I know I feel like that at my house. That's my role, is just saying no to my kids. But I try not to do that at work and only really do that when it's absolutely necessary. So I'd just be curious, over the years, when have you is there a time where you've had to kind of challenge, even whether it be senior leaders, whether it be someone in the front line, just on how they're trying to mitigate that risk, or just the approach that they're taking that maybe you didn't feel comfortable with?
Well, let me start by saying risk management is just a specialized form of management. There's a lot of different shades of management. You've got finance, you've got logistics, and every company has their own team of people. My role is to make my boss aware of things that could come up and bite us where we don't want it to. So saying no is part of the job, and sometimes that makes you unpopular, but the flip side of that is, a few years ago, our company decided to get into stadium seating, and they didn't discuss this with me, because I would have gone kicking and screaming saying this is the worst idea in the world. They had to figure out that we were going to lose money to do it before we got sued and had a bad lawsuit. So sometimes you don't get that no in the right place at the right time. But dealing with our rank and file, I also do our contract signing, and as a subcontractor, we're put in very difficult situations because we work for a general contractor, and we're required to indemnify and hold harmless that general contractor and that owner we're working for. We have to name them as an additional insured on our policy. So they have the same rights and privileges of our policies, up to and including some people want you to sign for sole negligence. So at Allied, because of my risk background, and Bob Maddox, who owns the company, has always been very strict on this, we literally will walk away from contracts. And when somebody's worked hard to secure a $3 million job and we tell them at the end of negotiations, sorry, we're going to walk away because we can't live with that contract. Obviously, we do some work in the state of Illinois, which creates its own set of issues. So it's a state-by-state thing, but I've learned to say no, and I really don't worry about it because that's what they pay me to do.
Yeah, I would agree that I'll get to what came to mind first with the question, but with what Steve just said, I'm in the same boat as far as getting involved in and reviewing those contracts, and they are getting very one-sided anymore in terms of liability. And when do we say no? It was kind of going back to a couple questions ago. We talked about recognizing or evaluating the projects before we bid them and looking at those contracts. So definitely see that on our end as well. But one thing that came to mind with that question, a big liability for us, or a big risk area, is our auto fleet. We have about 500 to 600 vehicles on the road, which carries a lot of risk. And I always say, in a risk management role, we're kind of the devil's advocate, for the organizations, and we're always saying the what ifs, or what could happen, and kind of playing out that worst case scenario and bringing it to light. And one just recently with the labor market the way it's been, is I'm sure everyone knows it's a very competitive market the past few years, and that's no different in the contracting world. And competing to get good people. One of the perks in the construction world is the benefits of having company vehicles and driving trucks and vans. And our policy has always been, the vehicles are limited to company employees only, or business-related passengers, not kids and things like that sometimes employees might want to pick their kids up on the way home from school. We get the convenience, but there's a lot of assumed risk when you get into that as well. So our approach has always been that we have not allowed anyone. Now when we're we're trying to recruit people over from the marketplace. That's been a benefit. Some other places that have allowed that. So it became very popular to want to change that and allow it. And we just kind of said, look, let's go back to the drawing table, come up with other ways of being creative to recruit, outside of assuming unnecessary liability. So that was an instance, wasn't the most popular opinion among everybody, coming back with, oh, we need to get people. But at the same time, it wasn't worth the risk of assuming, unnecessary risk either.
I do agree. I think saying no is part of the job and the position that we are in. I think one thing that has helped us is to, it's no, but why? And kind of helping to educate the people that are really pushing to do it, of this is why we can't, this is the risk, this is the cost to it, this is the regulation that we can't do it, even if it's high level. And there's been some conversations that maybe we work around it. So we'll maybe say, well, if it was possible, what would have to happen, right? So having some of those conversations, and you can determine it's not possible. Or if it was possible, there's a greater risk, right, in maybe your premiums are going up, or the risk of this or that. So I think saying no is appropriate, but then having those conversations to understand the why behind why you're saying no, and then determine what that risk reward is, and if it was possible, what would we need to do? Would we need to renegotiate a contract? Would we need to put different safety policies in place to determine what we can do? We're also privately held, family-owned company that certain things we take more risk than maybe we should, but it's paid off in the past. But making sure that they're educated risks. So it's always starts with a no, but if it was possible. And I would say a good portion of the time it still ends up no once the risk is understood.
All right, great. Good start. Any questions from the audience that we could get a microphone? Okay.
Hello. Thank you. Wondering, how have you considered insurance technology as a solution to mitigate risk, whether it's wearables, telematics, sensors, any sort of strategies that your companies have deployed in that regard?
I can jump in there. We have, and there's a lot of good resources, and that's a great question. I mean, technology is ever evolving. Going back to the auto side, that's a big one where we do use GPS. We have not implemented the video, the dash cams yet. That is something that is kind of come back to topic. It seems like every so often, and that's something that we're ruling out going forward. But right now, the technology with the GPS systems has become big. The big thing is learning how to use it, appropriately. We use it as a coaching method, not necessarily, disciplinary or anything like that. Otherwise, it can have, negative effects, in other areas as well. But wearables, we have tried that out. We've used from an auditing standpoint, there's a lot of technology out there and softwares in the construction industry that have helped us. It takes from just the risk team going out and doing compliance audits to empowering the employees in the field to use it as well too. So between software, technology, everything, there's a lot that's out there. AI, I think we mentioned at the beginning, is a big one that's going to be coming
All right,
up.
take a drink if you're.
So yeah, we've tried to utilize it where it makes sense for us.
It's not something we've looked at, no.
We still use an abacus for our finance people, so obviously in the drywall business, it is what it is. We've come a long way. We're not doing plaster and lath. We're actually using drywall. So there are technological advantages through new equipment that have come along. We used to use screw guns, so you had 200-foot extension cord underneath your feet. Now we're using battery-powered equipment. So there's a lot of new things that have helped. Our problem right now is some of the safety people. Again, we work for other people. We're on their jobs. They'll mandate things that go beyond what we do. And some of their things go so far beyond it's creating more of a risk than it is helping us. It creates a risk that we frustrate our employees and they'll quit and go to work somewhere else, or it's more of a danger to them. So we look at it. We're slow to adapt. And again, if anybody has suggestions on how we can lift 100-pound sheets of drywall and screw it off above your head, we're all ears. There are tools that do that, but they're for home do-it-yourself people. You can't get enough production that way to do that and make any money.
I'd add from a insurance perspective, so EMC is a property casualty company, and we've got an innovation team that's also looking at, different solutions for, contractors that we might, or manufacturers that we might insure. Is there a solution that can help us lower losses that we're gonna, that are gonna be ceded to us from our clients? So is there a solution that makes sense for them to help them improve safety, keep the losses down, which then also benefits EMC from a profitability. So that is something we're also very interested in.
We have our insurance currently with EMC, and we have had EMC in before to kind of help us say, what are we missing? Is there things that we could be doing differently?
Yeah, I had a question regarding some of the disruptions that we've had with the pandemic and labor force disruptions. And this is more geared, I guess, to the construction side of things. One of the concerns is that there's so many new employees that there's going to be so much construction defect coming down the pike in the next 10 years. And just wanted to get your viewpoint on, is that a real issue? And what else has happened during the pandemic that we're not aware of?
I don't know. Construction defect, I guess you could say, could potentially be a risk down the road. I can tell you we're a union contractor, and there is a strong need for people going into the trades, primarily, obviously targeting young adults to get into the trade. We've seen a little bit of shortage, but we've seen a bounce back as well too. There's a big push on recruiting and focus on, again, getting more people into there. I think that kind of goes with maybe the trade, the union side of things. We're fortunate our electricians come with a strong training background to come into the industry, so no one's set out there and running projects without the knowledge or the experience. So I don't know that our concern is so much on the construction defect side, but it is a concern on the labor shortages, what that might look like in 10, 20 years.
Well, it's an interesting question. It's something I talk about every day because I'm old and I'm dealing with people that are half my age. And I sit there and say the decline in the quality of workmanship I've seen in the last 10 years is just shocking. And I feel bad for guys like Travis because I can't imagine what 10 years is going to bring. There aren't enough people. We've taken a different approach. I mean, we're always looking for good people to come in the door. But over the last 15 years, we've doubled our sales and we've cut our workforce by 40%. Now, we've done that because we've invested in the people we have. We try to treat them well. We try to reward them. We try to make them feel like they're part of the family because we don't want to lose them. Years ago in our business, and I'm sure it's the same for yours, the dad came to work, the uncle came to work, then the sons and the nephews and all this. Now, we've been hiring Hispanic people for years. The president of the Carpenters Union was here about 5 years ago and came and saw our workforce, and he was shocked. He saw white people, I shouldn't say that but it's the truth, Caucasian people hanging drywall. If you go to Chicago, it's not done. So, but even the Hispanic people, most of the guys I work with today are Hispanic, and they're good people. They do good work for us. They just want to make a living. But at the end of the day, their sons are not coming into the business. And I talk to them. They'd rather go to work at McDonald's and make $18 an hour and be in the air conditioning. So there's a lot of opportunity. And the people that are working for us are making what I consider a lot of money at a very young age because we have to reward those people that are capable of doing the work.
Well, sorry, one other thing I'll add in there too, and Steve's right. In terms of everything he said, is we're seeing that same thing. Sometimes it is a struggle on the work ethic, productivity side that seems to be more prevalent now than maybe it was 10 years ago. But for every little bit, you've got of challenges in getting people into the industry, we're also seeing advancements in the construction industry, such as like prefabrication. So that is very big in the construction world anymore. We've see projects as far as we've doing multi-unit housing, dorm structures for something, in like a campus like this, where those facilities are almost built completely off-site in a controlled environment. In the electrical world, that's cutting pipe, conduit, bending, wiring up fixtures, everything to pretty much it's plug and play when it comes time to build the project. So, in terms of construction defect, that has actually helped that a lot. When you've kind of transitioned some of the work being done in the field to a controlled environment, quality control, we've seen that go up.
Can I say one other thing? To your point, the single biggest concern I have on construction defects is the quality of superintendents on the jobs. We've seen an overall significant decrease because about 10 or 12 years ago, well, 20 years ago, superintendents ruled the roost. They controlled that job, and they had project managers in the office to support them. Somewhere along the line, and this got even worse during COVID, the project managers ruled the roost, and the superintendents in the field are just their helpers. So there's been a huge decrease because the guys my age are getting out of the business, and the people coming in do not have the experience. And these kids coming out of school at 20 years old, bless their heart, they do not have the seasoning yet to see some of the things that are going to happen and get ahead of it. So that's my biggest concern.
Thanks for the conversation today. I one question around. I didn't hear you talk about like reputation or brand management. Is that more of a second order consideration, or is it front and center sometimes in the work you do?
For us, it's part of the conversation, right? We're not a household name or anything, but in our industries, we're very well known and seen as market leaders in some of them. So definitely, how we're seen and the stance we take on things, and, where we're putting ourselves in risk. The quadrant you look at, it may be a low financial risk, but if it's something that's on the front page of the association newsletters or in that industry, can have a huge impact on us. So definitely part of the conversation. Yeah, that's a good point.
Yeah, it's absolutely in the it was forefront for us as well too. We put a big emphasis on brand recognition. I talked about during the intros. We've been around a long time, and we've built up we believe we're very proud of our reputation, and as we all know, it doesn't take long to tear that down. And so a lot of the things we've talked about are easy targets for hits to that reputation and brand. Compliance is a big thing, right? If you're on the front page of the paper or the news for either an accident or out of compliance, it's negative PR for sure. So as we've grown over the years, we've definitely seen more struggles in that area, and it's posed more risk. Just the sheer nature of the more employees you get, the more exposure you get, the more projects you're on, you've got more chances for that. So we definitely do put a lot of things in place. Technology is a big thing anymore with brand recognition, and PR is making sure that whoever's floating around out there online, that it's right, and that goes into putting policies and procedures in place for things like company or personal cell phones and stuff like that on projects. So definitely a big area. Great question.
And we're second generation privately owned, so reputation to our owners is everything. We're the largest of what we do in the state of Iowa. And it doesn't matter if it's somebody in our corporate office or somebody that's just been hired a week. You'll hear this all the time from people. Hey, we're allied, we're going to be held to a higher standard. So that's just the way we operate. Whether it's OSHA coming in or Homeland Security, we get targeted a lot. We're the largest union carpenter employer in the state of Iowa, so we get audited more than anybody else, and it's just a way of life.
Thank you all for coming today. Appreciate that. I was thinking, we've talked a lot about different kinds of risks and your industry and how you're affected. How do you look at thinking about your risk appetite? We've talked about risks that you have you have compliance risks, you have commercial insurance things, so on. But how do you determine your risk appetite? How do you get buy-in from all leaders, things of that nature?
I think for us, our appetite changes, probably often depending on, what's going on and what the opportunity is. I don't think it's a set formula by any means. I think I mentioned we're privately held, family owned. So there's certain projects that we probably take more risk on because it's something new or they're very passionate about certain things. So I think it's hard to quantify or have a formula to do, but I think it's having the right people at the table to understand, because we probably make some decisions based upon emotion and excitement. So it's making sure that we have that seat at the table and can be heard and at least know everybody understand what the risk is. And then at the end of the day, if we decide to go, what can we do to minimize that? But it's a moving target.
Yeah, very similar here. Our appetite, changes based on external, factors. The market being a big one I mentioned earlier in the construction market, it can be very volatile, in times when the economy is doing good or when the economy is doing bad. It's obviously you're in a much better position when things are going good and everything's going up around you, and you can hardly keep up with the work out there. You can minimize those risks by being, I call it a little bit more picky on what you want to assume. But, that appetite when things do slow down, and you want to keep everybody busy, you want to keep everything going strong. Naturally that usually correlates with assuming a little bit more risk. Not so much on the the compliance. Safety side of risk management, but more on the financial side of, hey, maybe this isn't a project we quite wanted to get into before. The juice wasn't worth the squeeze, when everything was going strong. But now it's let's go ahead and bid that, or we're a little bit hungrier for that project now because it's a large project that's going to keep everyone going for a while. So, moving target as well.
In the construction business, every contract you sign is a risk. So if you're an owner of a company, you're in the risk business, and that we talk about that all the time. We try to be reasonable about it. But every contract I sign will say paid if paid. So if the general contractor doesn't get paid by the owner, we just worked for nothing. We're very careful about that. Now, recently we stepped out of our comfort zone. We were afforded the opportunity to sign the biggest single contract we've ever signed. We just signed a $42 million contract on a battery factory going up in Kansas City. It has $5,000 a day liquidated damages. Now, I don't sign that without somebody above my pay grade saying I'm okay with that, because usually we strike liquidated damages. But on a contract like that, it's not negotiable. You have to take it or leave it. So that's the benefit for being in the risk business, working for a contractor. That's what we do every day.
All right, well, appreciate the questions from the audience. I think we're just about at time. So want to thank Jenny, Travis, Steve. Thanks for coming out today and kicking off the Drake Risk and Opportunity Forum. So, thank you.